Pat Walker here with Mission Winners. Time for the top stocks this week that you should have on your watch list. So here's the first stock, Spotify. We're sorting this by industry group rank. This group rank is number 3. You can't get much better than that, folks, okay? Composite rating's 99. I want to share something with all of you. I was an IBD Meetup co-leader for years. I was in the beta test group for the original Daily Graphs Online. They invited me. We know, and again, IBD Meetup spokesman for years, a meetup, focusing on leading stocks and leading groups. It will really help you, okay? So let's get the relevant data here. This is group rank number 3. Composite rating is 99. Timeliness is A. Accumulation distribution, as I stated, is A+. Composite rating, as I said, 99. Relative strength, 96, leading the stock in the new high ground. We build a case. Always build a case. Last quarter's earnings of 363%. I'm not trying to hype you on the stock. I'm trying to point out data that's relevant. 300% increase in earnings this year over last year. That's pretty dang good, team. That's stacking the deck. Now, it lifted up here. It's basing right now. What would we like to see? Take out the tops of this bar here. The high on that bar is 499.02. Just make it easy, folks. 499. You could do 499 and a dime, okay? You don't have to do a penny more. Just round it to the next round number and look again. Constraints. Price, good price action, backed by good volume, and also a good market. So this is one to watch. Okay, we own this already, and so this would be an add-on also. Let's continue onwards. Let's get rid of that, and we're going to do this. Next stock on the list. XMTR, and I'm going to scroll down here on my other system to get to it. Right here. XMTR. Say, Pat, give me the lowdown on it. Group rank 41, A-rated group. Accumulation distribution A. Composite rating 94. Last quarter's earnings up 140%. Earnings estimates, they're looking for a 79% increase in earnings this year over last year. They are looking for a 428% increase in earnings next year over this year. These are the things that we look for. Money goes there. Institutions take note of this. Now I have to stress something. There's no guarantee, laying all that out, there's no guarantee it's going to work. And you can say, well, Bill O'Neill, what about Bill O'Neill when he was doing it? If everything he did worked, and I'm not criticizing him, the man changed my life. I'm so grateful to have met him a couple of times. If everything he mentioned or bought worked, he'd never have to have a rule about limiting losses, right? So we're pragmatic, we're realistic. We manage the stocks. We manage and control risk. So clean and simple tops going right across here. I'll draw a line for you to help you. There's a lower level line right there. Just going across these tops could be a buy. What's the high on this bar right here? High on this bar is 42.69. 42.70 up to, and the high on this bar is 33 bucks. 42.70 to 42.80. Pushing through there with volume could be a buy. And again, composite rating 94. Let's go on to the next one. And again, on these videos, I'm trying to educate you on what to look for to help you. Here's the next one. Hold on a second. We'll go there, and we'll do this. And here it is. Court ran up, pulls back, runs up again, tails off. What does this tell us? Most people don't really comprehend these things, but I'll share this with you. And I was managing money through the crash of 87. So yeah, we kind of know what to look for. Right here, those are tail bars. I pointed this one out for a reason. You can say, what do you mean? It's just kind of sticking up there and comes down. It does it again here. That tells us there's sellers there. What does that tell us? We need to take out these tops, and we need to take them out with volume. Earnings per share rank 85, but this is the big one, folks. Composite rating 97. The best rating you can get is a 99. Relative strength 97. A- accumulation distribution. I'm not trying to sell you on the ideas. I'm just pointing out things to look for. Take out the top of this bar right here. What would be 62.22? Oh, 62.30 could be a potential buy. With good price action, good volume action, and a good market. There we go. Let's move on to the next one, shall we? Here we are. SE. CADR. Group ranks 52. Last quarter's earnings up 192%. Last quarter sales up 31%. A minus accumulation distribution. Here's the sweet part though. Earnings estimates. They are looking, consensus earnings estimate, they are looking for a 473% increase in earnings this year over last year, and a 97% increase in earnings next year over this year. Power. A minus accumulation distribution, as I said. Take out the tops of these bars. What's the high on this bar? 118.58. The high on this bar is 118.55. Folks, 118.60 could be a potential buy on SE, say limited. We own this already and we'll be looking to add to it. Let's continue onwards. DoorDash. By the way, you can always see the name up there too. There's the ticker symbol, okay? And there's the name just to let you know. Earnings per share rank 60. But here's the important part. You'll love this. Composite rating is 87. I can live with that. Relative strength is 92, near new high ground. Those are good things. Timeliness is A. Here's where it gets good though. And I'm not trying to sell you on the idea. I'm just trying to point out relevant data. Last quarter, earnings of 300%. 300%. Earnings estimates going forward. They're looking for analysts are looking for a 120% increase in earnings this year over last year, and a 597% increase in earnings next year over this year. These are the things that we look for. I do stress though, it doesn't guarantee it's going to work, but it does increase the potential that it will. Again, we pay attention, institutions pay attention to current numbers, earnings and sales, and forward-looking. We do too, and we use it to our advantage. Potential entry go across these tops, up higher, but there could be a cheater entry taking this out right here at 179.22.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.